Yo, yo, yo. Welcome back to the channel. Dude, I was watching Spy all day today. Let me tell you, dude. All right. Watching Spy all day today. I was kind of indecisive on what was going to happen in the morning, so I let it do its thing. And then I started to see that basically it was forming an assortment of wedges, like rising wedges, like it does. You know, we talk about this on the channel all the time. And pretty much I mean, really, we were probably watching this one the most. I don't have it right in front of me, but pretty much, I was sitting here and like, we drew like this wedge initially or something, and then it broke down, broke back in, and it was climbing, and it broke out of it, then it climbed this one, and it was really boring. I'm not gonna lie, really, really boring for most of the day. But I did tweet that, and I didn't take the trade, so this is a paper trade, but I did tweet, I want to buy puts at like 448, 449, and look for a quick move down to 446 ish, and then get out for a scalp. But it's probably going to be too slow. I probably tweeted it like back in this region, probably. And just the way it was climbing so slowly, I was like, man, you're not gonna have enough time at the end of the day for you to really get the move that you need on, because it's an expiration day. And then of course you just get this big blast down. And then you just rock it up. If I would have entered calls on the other side of this thing, I would have been killing it. But yeah, so that was pretty much my story with SPY today. But let's talk about AMC. AMC is up at 6.67% today. Pretty good day for AMC. Definitely a bit of a bounce happening here, right? Looks like, let's see how we're doing on this trend. You would have to say this is a new trend line. Maybe you would draw it like this. As far as like your bull trend right now, yeah, I'd say that's probably a good bull trend for you to be following right now. So we'll make that yellow. Pay attention to, let's make it green and thick to pay attention to it as we're going through this analysis. I mean, AMC was looking pretty good today. Early on, especially, you were getting these moves up. The volume was pretty consistent to the upside, and then you kind of just flagged out. I was saying on Twitter that I was expecting AMC to be making a move towards $17. And then I said that around here because I saw this volume following through on the upside. But then you started to curl over. You started to look more like a wedge. And I tweeted out that wasn't looking very good, so you're probably going to get some retracement. And this is that wedge right here. Right, so you started to get that retracement, but you bounced pretty good here. You held this 1550-ish level as support, pretty good. Let's see if that was a fib as well, just to see what kind of support. Obviously, 1550 is going to be a psychological level. Not a fib from there, at least not on log. Let's see. Take it off of log. Oh, you kind of have a 236, but not really. Probably closer up then would be the right way to measure it. Probably from the, yeah. So you kind of bounced off of this. You bounced off of this 0.5. Then you held this 382 416 range, and now you kind of flagged up towards the end of the day. But really, you just had this steady chop that was going on with AMC. But you were already up, so that's pretty good. So you want to hold this bull trend, but we want to look at the larger wedges or wedge that we've been watching, and then put that in its grander context. So if you remember correctly, and I'm gonna pull it from the daily chart because that's how we've been making it. Yep. So the way that I had this measured is based on these points that I'm gonna highlight here. So these touch points, as well as the body of the candle on June 2nd, creating that lower band support essentially. We'll take that bull trend off for now. And then right now, the situation that AMC is in, as far as where it is in this wedge, I mean, you look like you have a solid bounce here now. Volume isn't quite as high as I would want it to be, but really, you're not really going to be looking for very high volume until you break a new high. Okay, so what you're looking for is once you cross this 16, and you can see that maybe it was found as resistance right here. Yeah, almost on the dot, 1625. So once you cross over this 1625 threshold, and it might not be tomorrow, but once you cross this 1625 threshold, you're going to want to see that volume come in, okay? So you can still come back here and before you bounce back up, but once you cross over this 1625 kind of level, 1625, you're going to want to see that volume follow it, okay? So you want to get higher volume than this general area, the 26th and the 27th of January, when you had that big push down, and that's going to show that bulls are back in control. I mean, you know, I'm the ultimate, you could see more downside guy. It's a bit of a meme at this point, but if we're being fair, you could see a push down to the bottom of the wedge. Let's see. Trading view is messing up my trend lines when I'm on extended. So yeah, let's go to the 4 hour. If you could see a push down to the bottom of the wedge here. So maybe this 1450 level, which is that key Fibonacci that we've been talking about for a while on the channel. And then that's going to give you that kind of swinging pressure to the upside. Let's see if we look like we're forming a rising wedge, because that, no, I mean, this isn't really a wedge. I mean, you could have this support trend just carry you out. This is probably not a very impressive support, though. That is an arrow, not a trend line. Yeah, so you have this trend now that you've kind of established. Let me take the extent so much. Well, let me extend it back one. Let's see. So you do have support here on it. That's pretty interesting. And then I think that's going to be it, right? It's steep. Yeah, very, very steep bull trend. So definitely not going to have any more support on that. Yeah, let's see. I know what you're thinking. Your scroll wheel, dude. Call me old school, right? Okay. I mean, I don't really mind this. I mean, this is a lot of selling pressure here, but I don't really mind this carrying you up out of here. But what you got to be mindful of is that now you're running into, let's see how this. Yeah, you're going to be running into a lot of these kind of shorter term resistance trends. That looks kind of, but they're all they're all going to be considered wedge breakouts whenever you break over them, okay? So basically what that means is every time that you break over one of these, it's kind of like a sign of strength within an accumulation. So you're going to get a move up, which is good. And that's why, you know, now's a good time to kind of be patient, okay? But you can get these breaks up and then breaks down, but you're going to be generally continuously breaking out of falling wedges. You could even say that it's a falling wedge within a falling wedge within a falling wedge, right? But you'll see that you do get this sort of inception type feel when you have a falling wedge. And we've talked about that before, how the patterns kind of build themselves within themselves, right? So you have this continuous falling wedge effect that starts to happen because you're kind of, rather than being in a bull trend or a bear trend, you're kind of converting into a reversal trend. And so the chart is going to look more and more and more like that pattern that's playing out, especially when you see a really big macro one playing out like this. You're going to see it kind of progressively happening on smaller time frames and from different angles. Now, just keep in mind, you know, as we've talked about, even when you break this blue trend, you still have to deal with this red trend up here, which the top, if it was to happen like in 2 or 3 days, is like $22. And you could still see continued kind of consolidation down into this. But being that we do have that key Fibonacci, and I'll draw that for you right quick. Let me put it back on. being that we have that key Fibonacci that we talked about. So if you pull this Fibonacci from before the January run to the top of the pre-market run, before they took the buy button away, you see you hung above this 618 Fibonacci level. If you do the same measurement the same way to the June run, see you're holding this golden pocket region. So this is a really key support for AMC, as we've discussed before. Let me pull that one more time and see if you just carried out this wedge as I have it drawn here. Well, I guess you would technically still be in the golden pocket for the most part. Your convergence is on the 707, which is $11.37. If you, and what I mean by that, if it's not clear, is if you continue down using this red trend as support, you would still kind of be bouncing around this pretty much the same region. Now, I mean, yes, $11.37 is, you know, significantly lower than the 1450-ish region that we've been talking about, but from a relative standpoint, the downside pressure would be a lot weaker at that point. So it would feel stronger because maybe you would come from like the 16 and then come down to this 1150-ish zone, but then you would start to see that progressive swing up. And that's what we've talked about with remember we had this bars pattern that we drew off of this, and I'm not saying that you should draw a bars pattern and then say, oh, that's what's going to happen, but I was just saying this to say that it could be a pretty similar move that you see. Oop. You could see somewhat of a similar move to this because it is kind of a comparable situation. And that's not to say that because it's comparable, it has to repeat itself or anything like that, but rather just to say, I mean, you could make the case that you kind of have already played a lot of this out also, and that you could be starting to see a little bit more upside. But it's just something to be mindful of. That you could kind of consolidate like this as well and still keep that wedge validated. So, I mean, overall, I'd say that things look pretty good. Like I said, you're not too concerned about the volume until you see, once you see these moves up, you want to see higher volume as you start to break. As you start to break into these new levels, right? You break above this 1750 maybe. You definitely want to see the volume kind of overpowering bears there, and you start to see that that more exciting upside. You want to see bulls stepping in those situations and buying the rally, right? So that's pretty much the update for AMC. As far as SPY goes, you're getting a little dump here in post market, which isn't too surprising because it just rallied so hard into the close there. Yeah, I mean, futures is gonna do its thing. I'd imagine that probably by the time SPY opens back up, we were following those wedges, and I'm only saying this because we should be paying attention to SPY so that we can better understand the market dynamics that AMC is operating in. But let me take a look. So right now, SPY is it just does these rising wedges after rising wedges. It really does. It's kind of just the nature of SPY, and what it wants to do. So let me see. Yeah, I mean this thing definitely needs some retracement for sure. I would imagine that tomorrow you'll see a retracement to this level on SPY, which would be this 442. I'd be surprised if you didn't see some sort of retracement to this level before you start to see more upside for SPY. So that'll be the big test. And the reason for that is just, I mean, it's pretty obviously you're getting a little overextended here on the shorter time frames. And then if you were to draw a wedge, just assuming that this is the top of the move. I mean, I'd say you broke out of a wedge to the upside. Let's see. Yeah, I mean, it just is like rising wedge. Yeah, so I think this is kind of how I would have to sit there and play with it a little bit more, but Yeah, you'll see this sort of general move for SPY and really futures. You'll see this sort of thing happen, and then you'll come back and test here. So probably like I'd say either tomorrow or Wednesday ish, you'll probably see a retest of this like 442 to like 4. Yeah, I mean, you could come down here to this 440. So we'll say that this is going to be the kind of range that we're expecting retracement to for SPY. I'm sure that there's a Fibonacci in there somewhere. If you measure the bottom of here, you just assume this is the top. Yeah, so this would be your 382. So it wouldn't be too drastic of a retracement, but you definitely would probably come back and just retest this liquidity zone. And I bet you if you show the VPVR, it'll show a little gap in there as well. Or a gap down to there, and like that's like the next stable point. Let me change the settings on this where I have more bars. I think it's this one. Yeah. Yeah, so there you go. So yeah, this like 441.50, kind of 442-ish zone is kind of the next kind of volume gap. You definitely have good reason to get down to this region, reestablish this, consolidate your way up before you press up. But yeah, I mean, you'll probably see SPY test above 450 at some point this week. I know that it got close here, but I think that you'll see retracement before you get any too much high. You'll probably press above 450 briefly and some change, and then see that press down. But then after that, I think that you could see a pretty swift move to the upside overall. Now, if you break below this 439, though, I'd be expecting you to come down to this 436, 437 region. So you definitely want to see some volume come in and support this. And that's just going to help with your upside on AMC as well, just because you have the general market showing that upside. So that's pretty much the video. Hopefully you enjoyed. That's the technical outlook on AMC, briefly on SPY. And yeah, make sure you follow me on Twitter. My Discord is in the description down below, completely free to join. I don't do any like signals or anything like that, but I do analyze SPY throughout the day on Twitter, so make sure you check that out. And until next time, peace.